All right, ladies and gentlemen, MrSotko here. Welcome back to the channel. Got a whole bunch of good crypto news stuff for you today, and we're going to talk about the Ethereum ProgPow. Once again, I love saying ProgPow. Ethereum developers again split over issue of ASIC resistance. The fate of Ethereum network is still unclear when it comes to the issue of ASIC resistance, and we have this good old deal coming out called ProgPow, which is going to basically brick ASICs and FPGAs. Well, FPGAs could technically be reprogrammed, but it would be very difficult to reprogram them constantly for this update. During the latest meeting, Ethereum core developers suggested an upgrade to disable ASIC, but the question of the need for it was reopened by independent Ethereum developer Alexei Kunov. He suggested Ethereum will always pose interest to ASIC producers, and given enough time, a specialized machine can be created to mine any algorithm. Suggested that the programmable proof of work or ProgPow update for Ethereum may not disable ASIC production for good and instead lead to the creation of a new batch of secret machines, or more likely secret FPGAs, which could be the case. I don't know. I started to have a doubt about the introduction of ProgPow after listening to yada yada and yada yada. He talked about publicly developing ASIC to use for VDF. I thought, why not publicly develop ASIC for proof of work so that no manufacturers can get a large advantage? The decision to launch ProgPow could only achieve a temporary effect. So, in the past, Ethereum network showed a huge increase in hashing power that arrived months before the official announcement of the E3 mining rig by Bitmain, which is usually the case. That happened with Monero and whatever other rig that they've produced. So the Ethereum network remained in limbo since the first mention of ASIC resistance in the summer of 2018. In the meantime, other networks like Monero changed their mining algorithm, and projects like Siacoin disabled Bitmain and Innosilicon machines to favor Obelisk miners, their own miners. So I definitely don't agree with that one. So it's interesting how this may work out. So somebody could essentially develop a ProgPow FPGA or something that goes along with this programmable proof of work in the exact way that they're going to make it. So that's could be a problem, but ASICs not so much, as they're only programmed one way. So I want to talk about Ethereum ASICs, and the first Ethereum ASIC came out was around this time. I had made a video on it, and everyone was talking about these E3 miners that were coming out from Bitmain, and this was the video that I made, back in the day. Long hair and the child pen in the background. Good times. And this was March 26th of 2018. So the E3 ASICs, I can't remember the exact date, they came out a little while afterwards, and so it was speculated that they're going to be 250 to 800 mega hash at the time, and no news article really showed what their actual hash rate was. Turns out the E3 was like 180 mega hash, which was not that amazing. That was about 5 or 6, regular AMD cards of whatever particular model. Now, so that's not too crazy, although the electricity usage of the E3 was actually pretty good. So its hash rate, not amazing, but its efficiency was pretty good. Now we're talking 1400 mega hash Ethereum miners are out, and it's starting to become a problem. So let's just look at the Ethereum hash rate. You can see it was really high at one point, and now we're a bit lower. And that is because of the falling prices and everything, and so some people just stop mining in general. But it's still a pretty big problem because the majority of this hash rate is likely ASICs, FPGAs, etc. for Ethereum, and your GPU is no longer making what it used to be, and that's a fairly natural thing with the prices low, difficulty high. But as we can see here, March of 2018, about when I made this, we were about here in the hash rate. So you can see that the hash rate, when I made that video, those E3s didn't even ship out yet, which is interesting. How could the hash rate be this high? Was that all GPUs? I don't think so, because when Bitmain announced their Monero ASICs, they actually announced them shortly after the Monero developers said, hey, we're going to fix the network. We're going to switch up the network so that it's ASIC resistant. We're going to change the algorithm a little bit so that it is ASIC resistant because they suspected either ASICs or massive botnets, and they wanted to switch that up. And just several days later, Bitmain was like, hey, look at this. We got these Monero ASICs for sale. Holy crap. So the interesting thing about that is that by the time those ASICs would even ship out to you, so they weren't even scheduled to ship out for a couple months, a few months, something like that, the Monero developers actually already forked the network before they even got to you or anything like that. So you were stuck mining some other old chain of Monero or some other kryptonite coin. And honestly, there aren't that many good kryptonite coins, in my opinion, other than Monero. Now, that's interesting. So we had this massive rise of Monero, and it was said that Bitmain was mining on their ASICs for upwards of a year before they even announced them. So, with that said, I would like to speculate that Bitmain was already mining, and perhaps other companies that made Ethereum ASICs long before that. So I would like to think that those started around this time. Now, there was a massive hype around this time of people desperately trying to buy GPUs so that they could mine. So mind you, this is not just all ASICs. This is a GPU frenzy as well. But I suspect those ASICs actually started to go online around this time. We could even say maybe even September, October, November, somewhere around there. So I think if this ProgPow comes out, I think we'll actually fall to around these hash rates back all the way back then. So your GPUs will be mining a lot more Ethereum, and this is good for the majority of people, as the minority of people have ASICs, and of even greater minority of people have an ASIC farm for Ethereum, and your few GPUs, your 10, 20 GPUs in your house or something like that are going to be making way, way more. So this is good for everybody, in my opinion. I'm totally on board with ASIC resistance. Now, when it comes to Bitcoin, it's a little too late for Bitcoin. I think if Bitcoin decided to fork somehow their algorithm, which I just highly doubt, and everybody would doubt that, that it could create a problem. Everybody would have to start mining on GPUs, and in that time and shortly after that time, there could be 51% attacks. I just don't think we will ever go back to GPU mining Bitcoin or anything like that. So I think it's way too late for them, but not necessarily too late for Ethereum and a lot of other coins. So I definitely support ProgPow, you know, for what it's worth and for what it may be. Now, there are test nets right now. You can find some videos of people going on the test net and mining, but that doesn't really show much, in my opinion. It just, I don't know, it just seems a little, I don't know why. It's just a test net for it, so you could test it out, but it doesn't really show you much until that actually goes live, so we could really see that hash rate drop. And then we'll kind of know how many ASICs were on there, because if Bitmain likes to mine a year in advance on their own ASICs, we could really speculate that this probably came out at least around this time when this massive hash rate started to increase, because those, you couldn't blame this on them shipping the ASICs out, because those ASICs didn't even ship out till probably around this time on the chart. As opposed to earlier, because they were only announced, you know, sometime in March and April, so they wouldn't even make it for another month or so, or two before they even made it to people's houses. So we could see that clearly throughout history, a lot of these ASIC manufacturers like to mine on their own machine, because you have to ask yourself, if they're so profitable, if the ASICs are so profitable, why would they sell them? And that is a very good question. And the answer is, well, they won't. They won't sell them until they start to become lower profitability. And imagine creating a machine for a certain price, which is probably pretty low when you have the economy of scale in a big factory, right? So you make this machine, and when it first comes out, it might be making $100 in Ethereum a day. It might be making 80, 50, 60. So why not just mine on them? And the answer is, why not? You know, so of course they mine on them, and when that halves, then they can sell them. So not only did you mine on them for $50 a day, let's just say, each one, now when it's down to $25 a day, you can go, okay, we could sell these now, and we'll sell them each for $2,000 a pop, or whatever they were sold at. And then you make a vast amount of money. So not only did you make money mining with it, you actually made a ton of money selling it too. Huge profit compared to what it took you to actually make it. So it's one of the best schemes, one of the best profitable schemes I think I've ever seen. And Bitmain is suffering now, which just who cares? Moving on to the next article here. Wife of Norwegian billionaire, allegedly, I'm going to throw allegedly in there, kidnapped and ransomed to be paid in Monero. Well, first of all, congratulations for somebody to ask for Monero for once. It seems like these ransomers, I don't even know how you say that. People who request ransom in crypto always request Bitcoin. Now it's time for that Monero request, but don't kidnap anyone. Anyway, moving on. And Elizabeth Falkovic Hagen, wow, long one, the wife of Norwegian billionaire Tom Hagen, has been missing since late October, and the Norwegian police have been investigating it as a kidnapping. It seems like their fears have come true. According to Norwegian newspapers, someone claiming to be the kidnapper has demanded a ransom of 9 million euros, 10 million, to release Anne Elizabeth. Kidnappers allegedly have demanded that the ransom to be paid in the anonymous cryptocurrency Monero, since its transaction history is completely hidden. This is in contrast to many other cryptos, such as Bitcoin. Tom Hagen is ranked as the 172nd richest person in Norway, according to a list published by the Norwegian financial newspaper, worth approximately $200 million. So if you're worth $200 million and you're only the 172nd richest person in Norway, how rich is Norway? What is this? So I hope this person is found, but again, the article is a little sensationalized in the sense to say that she's kidnapped since she's been missing in October, and they recently asked for a ransom to be paid in Monero. This could be just somebody like a fraud, like, hey, like this missing person, let's ask the billionaire Tom Hagen for Monero and we'll give her back even though they don't have her. So I don't know if they actually have her or not. They don't know that, but an interesting story. You know, a lot more of these have been coming out lately. A lot of crimes, a lot of ransoms to be paid exclusively in crypto is starting to come out of the woodwork a lot lately. So moving on again to another topic, 219,500 Ethereum Classic worth 1.1 million double spent during the 51% attack, and Coinbase may delist it. So ETC has been under siege due to a 51% attack. There was initially incorrect information about the 51% attack, that it was due to the testing of 1.4 gigahash ASICs, Ethereum ASICs, and did not have any associated double spends. This caused a public outcry to ban ASICs on the Ethereum Classic and Ethereum networks, and that I think that public outcry is not necessarily due to the 51% attack. I think it's because people are just getting ripped off with their GPUs and they're tired of ASICs on the network. So however, an analysis by Coinbase reveals that 219,500 ETC has been stolen and double spends, leaving no doubt that this attack was done for profit and not due to ASIC testing. However, the ASIC testing did sort of mess up the chain a little bit, and who knows if it was the people with the ASICs or not. Either way, 1.4 gigahash ASICs are on the network now and will be annihilated by ProgPow. So either way. Further, Coinbase's analysis reveals that the 51% attack has been ongoing from January 5th to 8th, making this a prolonged attack, not a one-time incident. The longest 51% attack was 123 blocks deep, which is about 30 minutes. There was a total of 15 of these attacks so far, most of which were associated with double spends. Merchants and exchanges have been told to wait at least 400 confirmations before accepting Ethereum Classic transactions. So due to the lack of security, Coinbase has frozen all Ethereum Classic deposits and withdrawals. It's not yet known whether Coinbase will delist Ethereum Classic, but it seems like it's a possibility if the security problems cannot be rectified. Surprisingly, OKX remains open for Ethereum Classic deposits and withdrawals with only 100 confirmations required. This seems like a major security risk since the attacker has already demonstrated that they can 51% attack more than 100 blocks in a row, and that's why the Ethereum Classic developer said do 400, which will take a long time to confirm, but as long as things are safe for now. So, we're starting to have a problem with 51% attacks. I read a quote from Charlie Lee, who basically said only proof of work coins and decentralized coins can be 51% attacked, and that's kind of a good thing, because that means that it's not centralized and permissionless, because if it cannot be 51% attacked, it is centralized and permissioned. So now, I think a problem that we have here with these ASICs, these 1.4 gigahash ASICs, now they're saying that, okay, it wasn't due to the testing of these 1.54 gigahash ASICs. I swear I could talk. But we don't know how many of these ASICs were made. We don't know where these ASICs are. We don't, well, in China somewhere, but we don't know if these were just on a test net, like testing them, and then they turn them off, like, okay, these work and we'll ship them out, or if they have an entire warehouse of them going and 51% attacking, because it's clearly not through NiceHash at the moment, and nobody knows where this is coming from. So it's got to be pretty much ASICs, because to get that much 123 block deep on Ethereum Classic is kind of difficult. So there are a lot of websites too that show you the cost of like how much it would cost you to 51% attack a coin, and Ethereum Classic is really not that costly, but I still disagree a little bit on the that it wasn't exactly the 1.4 gigahash ASICs. They certainly don't help, and we don't know how many of them were made, and we don't know how many of them are online. And with that many, if you had a lot of them at 1.4 gigahash each, you certainly could do a 51% attack. Now moving on, Tron price analysis. Now, I'm not going to read this because I don't like TA. I think it's just voodoo. I think it's kind of just like your horoscope, you might as well go play the lottery. But it is interesting to note that it's on an uptrend for sure, posting impressive gains in a short of 800 million from the top four. It's up 75% in the last day and a whopping 44% in the last week, cementing our bullish stance on Tron, I guess. At this rate, we expect Tron prices to expand towards the elusive 4 cents by the end of February 2019, with accelerants being significant company partnerships, the revival of Bitcoin, and more defection from Ethereum. So we will take a look at Tron on the market cap here, but a lot of Tron bullishness lately. I'm not a big fan of Tron because decentralized internet doesn't mean anything, but moving on. Shapeshift admits imposition of KYC accounts hurt the company financially. So Shapeshift, in case you guys don't know, Shapeshift, you put Vertcoin on it, you can get Bitcoin out of it. You just basically give them your crypto, and then they give you a different crypto in return. So it's kind of like an exchange, but it's honestly a lot faster. You don't really have to sign up. But lately, KYC is really starting to hurt them, because it was fairly convenient to just throw some random altcoin on there and then get Bitcoin out of it, or Ethereum or Litecoin or something like that you wanted better. And now with KYC, it's definitely going to hurt them a lot. So the company's CEO, Eric Voorhees, revealed with a heavy heart at the company has let go 37 employees, or about 1/3 of its team. So according to the CEO, the issues within the company which led to firing people were structural, legal, financial, and customer related. Shapeshift is not the first company to feel the negative effects of 2018's prolonged bear market. Bitcoin has reported that industry giant Bitmain let off its entire Bitcoin Cash development team last month. One of the reasons for which Shapeshift has reached a point where it had led to people off, according to its CEO, is the KYC accounts. Business was declining from both aggregate market recession and increased competition. Our imposition of KYC accounts themselves, the results of being of trying to be cautious in a challenging regulatory environment, caused many of our most valuable API partners to leave us for competitors who have not perceived regulatory risks in the same way. We expected it, but still, it stung both financially and psychologically. So basically, they had to KYC to perform with proper regulations and such. So kind of unfortunate. I used Shapeshift a few times. I don't recommend it entirely all the time. They actually have reasonable fees, but exchanges are just better overall. But if you receive like some goofy coin like Vertcoin or something like that, a whole bunch of it, and you just want to get Litecoin or Bitcoin out of it, Shapeshift is actually pretty decent for that. But with the KYC, it just sort of challenged a lot of people. Like they said, they had a lot of customers with API, and they would just change, switch it to something that didn't have KYC, where they didn't have to go through the hassle of it. So moving on, $136 billion market cap. We will hit the refresh here, still 136. We can see that Tron here is about 800 million away from being in the number 4 spot. So with Bitcoin Cash with a $2 billion market cap, it could actually, it's just about 900 million or so. So it's actually fairly close to beating Bitcoin Cash, very close to Litecoin, Stellar, who are sort of in a race. They're only 4 million away from each other, and EOS in the top 5 spot there. So if Tron continues its uptrend even just a little bit more, like the 10% or so more, it will definitely be close to the number 4 spot there. So interesting how Tron is starting to take over. It's probably just more hype with Tron, though. Who knows? But that's all I have for you guys today. Make sure you guys subscribe to the channel and like the video. That helps out a lot. I also have a list of my social media in the description below: my Twitch, my Twitter, and my Steam account. Follow me on there. But I hope you guys enjoyed the episode, and as usual, I will see you guys next time.